Hi everyone, welcome back to my channel. Most Americans who talk about lower taxes are asking the wrong questions. I know this because I've relocated internationally myself and structured my life across borders. And what many people underestimate is that it's not about finding a zero tax country. It's really about understanding how US worldwide taxation interacts with where you live and how you earn. In this video, I'll break down the top 5 countries Americans should look at for lower taxes, what taxes actually matter, and who truly benefits from relocating and who usually doesn't. And before we go into everything, I need to tell you this. What I'm going to tell you is just for your information. I'm not a professional tax advisor, so this is of course not tax advice, legal advice, or financial advice. We can't provide that. You should instead talk to somebody, if you're in doubt, who is actually a licensed tax advisor. Let's start with country number 1, and that's Greece. I would say this is really the paradise for retirees because Greece basically offers many incentives if you have passive income, if you're no longer really an active entrepreneur, occasionally maybe also if you are still an active entrepreneur, but this is rather an edge case. It's really focused on retirees independent of the age. Like you could of course be 30 years old, you don't have to be 65 or something, as long as you are retired right now. Because the cool thing is there's a 7% flat tax to foreign sourced income, where there's no permanent establishment or similar in Greece connected to it, and it's valid for a full 15 years, which in many cases is hopefully enough, or if not, then you can still move to another country afterwards if you're not happy with the regular tax rates. So this can be a really good offer if Greece is basically the type of country, especially if this type of Mediterranean geography is something that makes you happy. Country number 2, you might have heard of this one, Spain. It's one of the traditional countries that actually offer exciting tax advantages for expats, even though the normal tax rates in Spain are actually not very attractive. Like normal, this is the weird thing, like normal Spanish people or long-term residents of Spain pay relatively high taxes, even on a European comparison. Whereas if you come in as an expat in the first couple of years, you can pay some really handsomely low tax rates. One of the reasons is that Spain has this famous Beckham law, which is basically named after the football player, soccer player. You don't have to be David Beckham. You don't even have to have such a high income. Even if your income is by far lower, then it can still be interesting for you, be it as remote worker or be it as a highly paid executive, where there's typically some leverage to structure things, or where often your company might be somewhere else. But it could be even interesting for a couple of years if you are actually working for a Spanish company, or if you're planning to build something up in Spain, because basically they give you a 24% tax rate on Spanish sourced income, which is, it might sound a bit high at first, but it is, given that it's on Spanish sourced income, it's actually much lower if you have a high income. Let's say you have a 100,000 euros income. If it's coming from a Spanish company, the tax rate is much more favorable than what you would usually pay, and you get this for up to 6 years. And if instead your income is coming from outside of Spain, but it must really be coming from outside of Spain, you need a company with some substance somewhere else, not just a mailbox. It needs to be an actual permanent establishment with substance somewhere else. Then if you set it up correctly, it's actually not taxed in Spain for those 6 years. But of course, keep in mind, it's usually taxed somewhere else. So it's not like a zero tax income, but still the tax rate can be quite favorable if you set things up correctly. So who can Spain really be interesting for? Well, of course, you should probably like Spain, because otherwise, why move to Spain? But I think it's hard not to like Spain, at least from a lifestyle aspect. The food is nice. It's the Mediterranean Sea. The life expectancy is very high. And generally people are nice and friendly, outgoing, making it easy to make new friends, or maybe also learn some Spanish, which I hope you will if you relocate to Spain. So in the end, I think it can be really good for executives, for high-income employees, especially in software engineering, or just for professionals. Even, as I said, locating into Spain to work for a Spanish company, it's still maybe not quite as handsome in terms of the taxes, but it's still a good incentive that you get in the first 6 years. And then after 6 years, you could still look into either moving somewhere else, discovering other countries like Greece before, or more countries out there in the world. Or you might actually say, okay, I'm going to be fine with the higher Spanish tax rates. Country number 3, and this one has been in the news a lot the last 10, 15 years, Panama. It sort of set the gold standard originally on territorial taxation, basically the principle that foreign sourced income, meaning from outside of Panama in this case, is not taxed, but only income from inside the country. And it's, long been, especially for Americans, it's long been one of the go-to countries. Why? Because they actually use the US dollar. Like formerly they used the Balboa, but the Balboa is basically coupled to the US dollar 1 by 1. So it's essentially the US dollar. And many things will feel very familiar, like the culture. The main difference is probably that Spanish is the main language, but then again, in some parts of the US, Spanish is also not so uncommon, so not even that is a big difference. Time zone wise, it's in familiar time zones from an American perspective, but you have to be aware you might gain the wrong attention if you're not careful, because it is just labeled as this country that tax savers will use, and in some circumstances this can actually be a real problem. On the one hand, banks might look into your stuff a bit more closely because they, want to make sure that you and the bank are compliant, and also because, of course, they have to do the FATCA reporting. That's another real factor. Also, if you have, or if you want to have European bank accounts, it's usually not going to work out, because European banks really don't like Panama, because from a European perspective, Panama is on the blacklist of the EU right now. It wasn't always like this, but it's probably not going to go away tomorrow. Also, the visa requirements are actually stricter. A couple of years ago, there was still like this very nice friendly nation visa, which had relatively low requirements. Now the requirements have gone up a bit. So this means the cost of setting up Panama will be a bit higher, and there will just be more restrictions that you're going to have now versus 10, 15 years ago. Why do some people definitely love Panama though? The rules are now relatively clear, since it's really been established how things work, what you can do, what you cannot do. The Panama Papers now are also in the more or less distant past. It's been like 10 years now, so they're not entirely forgotten, but sort of the conclusions have been drawn, and new rules have been made. American banks are usually easier to use. You're not going to find the exact same, and there might be some surprising fees. You have to be aware of that. It's not always as comfortable, but it can make sense. And then again, of course, nobody actually forces you to have a bank account, typically in Panama, or to use it very much just because you live there. You can often use actually foreign bank accounts, and it may really be advisable to do that from many perspectives. And then generally, I would say Panama it's a relatively developed country. It is also relatively business friendly. Just be aware, if you're into certain things like tech, might not be the most welcoming country for you from an infrastructure perspective. It really is maybe a bit more interesting if you're like a remote worker or very small business, something like this. If instead you want to build a VC funded company, it's most likely not the right country for you. Another country that can be really interesting for you if you're coming from the US or maybe also from Canada is Costa Rica, because Costa Rica is actually similar to Panama in the sense that it has also territorial taxation. So there is no income tax on foreign income, meaning income from outside of Costa Rica. And if you're a remote worker, freelancer, contractor, this usually plays in your favor, of course, because probably your clients are somewhere else. Anyways, they also do have a digital nomad visa. So if you want to stay longer, this is perfectly doable. And depending on what you like, Costa Rica can be like a really, really nice country to live in. It also brings the benefit that it's maybe not as stable as some European countries or also some Asian countries, but it is for the American continent relatively stable politically. So can be a really, really nice option to go for. And of course, similar to Panama, it's in US friendly time zones. So it's not like Greece or Spain, which is in a very different time zone, which can be uncomfortable if you work remotely and you need to be in sync with American clients. Country number 4, Dubai. You have probably heard of this because for many people, it's typically celebrated as the go-to country to save on taxes, have a really nice lifestyle, you know, hang out with all the rich people and just be in this sort of tech wonderland, which Dubai certainly is to a certain degree. One of the things that everybody is really keen on is, of course, the 0% income tax, both from income from inside of the Emirates or also from outside, it doesn't matter. There's also no capital gains tax on your personal capital gains. So this also makes it really nice. The infrastructure, of course, is really strong, like especially if you compare it to other countries which have also very favorable taxes. Dubai is probably one of the most developed, safest countries also to be in terms of general safety, internet speeds, public transports, everything is more developed than many other countries which have very interesting fiscal rates. And it's a very international country because of course of this setup, so many expats are there, so many entrepreneurs are there now. It's really kind of this tech wonderland for some people. So this can really, really make it interesting. On the other hand, you have to be, of course, aware that if you come from Europe or have European clients, it can be interesting because, you know, the time zones kind of align. You're in the more or less like Eastern European time zones. So that's good. But if you have American clients, that's not so nice because your time zones don't really overlap that much. Unless you like working in the evening, then maybe it's okay for you. But if you're a morning person, it might not be so nice for you. And of course, also keep in mind, there is now a corporate tax of 9%. So if you have your corporation there, it's no longer tax-free. And probably more importantly, actually, than those 9%, is that in the last couple of years, the audits have become way more intense. Like even small businesses in Dubai tend to get audited a lot now. It's quite some pain. It can actually be worse than other countries like Switzerland or even most European countries where maybe the tax rates are higher and where maybe the rules are actually much more stricter, but you don't get audited like every year. In Dubai, this is a bit more extreme now and it can actually make things less attractive than you initially thought. So you actually have to look into the details very, very carefully and be aware this is an evolving situation. Now it's 2026. It has already changed very, very much in the last 2-3 years. In another 2 years, certain things might have improved or also worsened quite a lot in Dubai. Really be aware of this. Really look into this case very specifically. And in doubt, of course, you can always reach out to me about the current situation and whether it makes sense for you individually. Because also, of course, there's factors why Dubai might not be the right country for everyone, in spite of all the cool things that Dubai certainly has to offer. So let's look a bit at the trade-offs you will have to make, because I cannot emphasize enough, there isn't this silver bullet solution that everybody should actually go to. It's not like there's this 1, 2, 3, 4, 5 countries that are the best countries for absolutely everyone. It really, really depends on your individual situation, a bit where you're coming from. This is why I'm making this video for Americans and probably also Canadians. Also depends on what stage of life you're in, you know, whether you have kids, what your lifestyle is, what you do if you're more an entrepreneur, what you need, what you don't need. So very often I hear Americans talking about lower taxes and what does this actually mean? Because there's quite a few things that fall under the category of taxes. There's obviously income tax, but then again, there's also capital gains tax, which is usually something different unless you're like a full-time trader, then maybe it can fall together. Also, there's social security contributions, which are kind of like a tax. And then there's other taxes like, you know, property taxes, value-added tax, and all sorts of consumption, import taxes, tariffs, etc. Also kind of have the effect of a tax. So typically what you want to find is a good combination actually of favorable tax factors, but also a match with your lifestyle. Because you're not really gaining much if, let's say, you're in a zero income tax, zero corporate tax country, but many other things don't match up. Like maybe you just hate the area, you don't want to be there, or things are really, really expensive there that you need, or it's not safe for you, or you might also lose your clients, things like these. So first, you really have to define, like, who are you? Are you more of a retiree who has maybe some pension income, which is kind of like a passive income? Are you an active entrepreneur who still has to work every day, servicing clients, building things, and growing your business, leading employees, maybe trying to raise funds and so on? Are you more of a remote worker, or do you already have a lot of passive income, and are you right now in more of a chill phase where you just live from your passive income, or are you maybe some other type of a high income professional? Because it really depends on what you can do. One of the things that many people tend to underestimate, for example, is that if you move to certain countries, you might actually make less money because some clients will not want to work with you any longer, or will not be able to work with you any longer because of some policy restrictions, or maybe time zone misalignments, or they just want you to be close or something like this. Especially with fundraising, this is often a case. They kind of want you to be close to either their office or to a location they're familiar with. If you are in certain countries, then it might be really difficult to raise funds, especially from American or even European investors. If you're in, let's say, Latin America, it will typically not work out. So depending on your priorities, it might actually make sense to pay more taxes and then have a better match for your business, because you can make more profit or have a higher income, grow your business. Whereas on the other side, in some scenarios, it might actually make sense to optimize your taxes very aggressively if there is a match with the lifestyle that you're seeking and sort of the income and business structure that you have. And also Social Security contributions, it has two sides. On the one hand, it is kind of like a tax, so it would be nice if you didn't have to pay into it. But then if things go sideways, it also means you're not getting anything out of it, right? Like unemployment insurance or something like this. If you're a freelancer and you have some really nice years, maybe something happens to your health or something else terrible happens. Maybe AI takes your job, and then maybe for 1 or 2 years you don't have a job. If you have enough savings, if you have enough passive income, great. If not, sometimes it might have been better to actually pay into some social security system. In these cases, it really depends very often also on your mindset and how well you are with saving money, how much you enjoy doing this actually. By the way, if you're currently thinking about relocating for tax reasons and you're not sure whether the math actually works out for your income level, for your business model, your long-term goals, that's completely normal. If you want, you can book a short call with me and we'll map this to your exact situation. The link is, as always, down in the description. Now, if you're new to this, and this is specifically relevant to US citizens, you might forget that US citizens have worldwide taxation. But then again, it's not always as bad as it actually sounds. Because what the US basically looks at is how many days you spend inside the country. Because if you actually spend practically all the year outside the US, specifically there's this 330-day rule. So if you spend at least 330 days outside the US, it's basically everything except 1 month, then you can be tax-free on 130K of your foreign earned income. So for example, if you have set up your company somewhere else in a suitable country, and that's where your income is coming from, and you're also not spending much time in the US, so basically maybe coming over for Thanksgiving or Christmas, but not more than that, then you can actually not pay taxes on a huge sum of your income, because 130K, it's probably enough for many nomads and expats. And even beyond that, you could look into structuring your company in the correct way so that you don't have all the income on your personal side, but that there's more income or profit basically in your company. This is where it becomes interesting to structure things correctly. What is important though, it shouldn't not only be true that you are really 330 days outside of the US, but you should also keep all sorts of proof like tickets, bookings, credit card statements, so you can actually prove this when there is an audit, so that there is no misunderstandings. Despite this, you still have to file certain forms in the US. Like even if you end up not paying taxes, you still have to file certain forms. You have to declare all these things that you were outside the country, for example. Also, there's like a foreign account reporting. If you have bank accounts in other countries, then except for very small amounts, you always have to report these accounts, even though the bank kind of reports them to the US anyways, but you still have to fill out some paperwork. This is very important because if you don't fill out the paperwork, there could be a very big fine. If you structure your things correctly, And if you actually stay outside of the country and you're not sort of forced to be an employee for a US company, then you can really, really lower your taxes and also social security significantly. But as always, it's unfortunately not something you can just do like once, but instead it's something where maybe in the beginning you do a bit more, but you still have to review and file things every year. You have to look at how rules change every year. So let's sort of compress this in a small decision framework. Basically, choosing a low tax residency, it's a cost optimization. It's a strategic decision. So it really has to align with your personal and professional goals. Because on the one hand, lower taxes, it can really make sense if you already are remote or will be very soon. If you don't rely on being close to US investors, clients, or similar. If you probably value like lifestyle flexibility, traveling the world a bit more because you haven't seen so many countries in the world yet, or you just want to do this, and you're also fine without having the US Social Security benefits because you're not paying into the system, or another system, like if you went to Europe, for example, then you would also have to pay in the system, and it kind of contradicts paying low taxes. On the other hand, you should really question this also, because it doesn't make sense if you want to build a VC-funded company. Often, maybe it works out for a couple of months when you're still bootstrapping, or if you're doing a very intensive phase where you want to save on costs, but typically they want you to be close. And the same goes for government clients, obviously, or so larger corporations. Very often they just will not support residencies outside the US, or in a similar way outside, for example, Canada. It's the same story. They will just often not support this, and you might question this and might say this is stupid, but very often it's just not in your hands, and it can, or it will definitely limit your options typically. So it really depends on where you're currently in. Definitely make sure that if you want to go remote, they're also fine with not just you not coming to the office, but you actually working from some other country, even if it is the same time zone. Not every company will support this. And then in the end, you also, I think, just have to make a decision. Do you want more money? Because ironically, saving costs, on taxes or on rent and so on, it doesn't always mean that you actually have more money at the end of the month. Sometimes it also means you have much less income / revenue at the end of the month. So this can go both ways. If you really want to maximize money, actually, ironically, paying some taxes is often the better strategy, at least for a long time, until maybe you're very big and then you can optimize more. So really keep this in mind. This is often something more about having more flexibility and a nicer lifestyle, not so much actually having a better savings rate at the end of the month. But of course, it depends on the individual case. As you've seen, there are countries where Americans can legally reduce their tax burden significantly, but lower taxes are never the full story. Structure, compliance, lifestyle trade-offs, opportunity costs, banking access, and social security all matter just as much as the headline tax rate. Relocating can really increase your freedom, but it can also quietly reduce your growth potential if you get it wrong. That's exactly why my next video is called Don't Move Abroad Before You See This. In that video, I break down the biggest mistakes people make when relocating and why those mistakes often cost far more than the taxes they were trying to save. If you're seriously considering moving abroad, make sure you watch that video now before making any decisions. See you in the next one.